Welcome once again to this week, and what a week it has been. It is so fantastic to be back here in the middle of a long weekend. Normally I'm at the end, but this time dab down deacon in the middle. Whatever I'm trying to say. I don't know. All right. Anyway, before we get our hellos out there, just want to thank everyone for being here in the middle of what do we call this long day weekend? I don't know, whatever this weekend is called. We're in the middle. We're here. And we're going to get going here. We got a lot of good news here for us today. And holy banana bread. I'm just off to my tongue seems to have gone on strike. And we're going to talk a little bit about striking later as well. But in the meantime, let's just say hi to everybody who has popped in. All right. We got 9 in here with a couple of I'm not sure what those emojis mean, but it's like Pinocchio having an anger day, sort of. We got Bleak in the house. Hello, Bleak. Great to see you. Vaughn is in the house. Great to have you again this week. It is great to have you here again this week, Vaughn. Thank you for showing up. All right, we got Jill in the house saying hi. Hi, Jill. And a hi to Stan. All right. Now, this is also the weekend where I'm going to drop some of those every month. I drop some free memberships. Today is that day. So we got them coming up here in just a moment. And when I say by just a moment, I hate waiting for stuff. So let's just give me a second here to get these going. That's not what I wanted. Give me 1 second here. I'm just clicking on their thing. Here we go. Here we go. It is happening. And let's see who is going to grab a membership this time around. All right. Perfect. Okay, let's take a look and see. So we've gifted 5 memberships, and they are going to Bleak 784. Yay! Awesome. Verena was also gifted. Sky Seekers, that's funny. Kay Miller was gifted. And the friggin' Oracle. Now, Sky Seekers is my old science station, so just give me 1 second. I'm going to gift a single membership to make up for that because really, I don't know how to turn it off so that old station of mine doesn't have the ability to win. So let me just buy one more. Here we go. Here we go. And that should pop up here in a second so that we can have the gifting over. Congratulations to all of you brand new channel members. Here's the thing. I actually posted today for the channel members just a message to let you guys know, to let me know what you guys want to be voting on for the exclusive channel membership content, because that's coming up not this week, but the following week. So we'll get a poll out pretty soon once I've got a few ideas of what you guys want to see. It's probably going to be an exclusive live stream. Unless you guys vote for something that I can't do in a live stream, then it will be a video. But I'm looking forward to that. I think that's going to be a lot of fun. Awesome. Okay, there we go. Tim Carroll. So, hey, Tim, you have yourself a membership. What you guys can do with memberships, by the way, for those of you who are new to the membership, to the channel memberships, anything I post, like I will post, for example, my buys, my sells, dividends, things like that. I also do a summary every month of like the dividends I have coming in and coming out. You guys get to control what I do for the channel membership videos. Also, when you request a deep dive as a channel member, I throw a bit extra weight behind it when it comes to pulling it out of the pool. So I do give preference to the channel membership because you guys are supporting the channel. So I definitely want to see that for you guys. Any of you guys who are not channel members and you want to be able to take advantage of this, well, all you got to do is click on that little $ thing down below and open up a channel membership. And hey, you can also, if you feel like you want to gift a bunch of memberships, you can do that too. That's all fine and dandy. That's just ways to support the channel. All right, let's see who else we have in the house. We also have King of Day. Hello, King of Day. It is great to see you. And the friggin' Oracle has arrived. No, I'm not going to make one of those commercials on as an exclusive channel membership thing, Ken. But that's funny. I do feel I'm laughing on the inside for sure. All right, so Once again, thank you guys all for being here. And thank you for the people who watch on the replay, because about 75% of the total views on these live streams come after the fact. So, and that's probably going to be really true this today because it's a long weekend. I imagine there's probably a few regulars who are out camping, or, do people camp anymore? I don't know, but out doing something for that long weekend. All right, let's start off with our first news story, because I certainly want to see what's going on. Okay, so the U.S. credit report. This was a big driver this week. So there's a few different credit agencies in the U.S. One of the big ones is Fitch. So Fitch, they basically took the U.S. credit rating from a AAA down to an AA plus. And they said the reason for doing this, one of the big reasons, was how long it took for them to take care of that debt ceiling. They felt that it dragged on too long, and it had an impact on the market for too long as well. They also say that the U.S. debt has risen to 113% of their annual economic output, and that's not a good thing. So they're definitely seeing a lot of bad stuff when it comes economically with the states, so they lowered it a little bit. Now, when they did this, one of the statements they actually said, Fitch did say that the United States debt is on an unsustainable course. And one of the big problems is that the lawmakers, at least the ones in power, they've been shown to be very dysfunctional and unproductive. And they're not really addressing a lot of the issues that are causing some of the economic woes in the states. So that's not a good thing. Now, how did it impact the market? So obviously, even though the U.S. market had it priced in because they kind of suspected this was going to happen, the big issue is that, pull this over. The big issue is that it still impacted the market. We did see a drop. Now, there was some recovery by Friday afternoon, but as an overall, the market was in the negative last week. And this was the big driver of that. Now, those of you who like crypto or commodities like gold, this did cause a little bit of a bump initially because a lot of people were kind of hedging. Like when they saw the market starting to fall, sometimes people will be like, oh God, I got to move some of my money into Bitcoin, or I got to move money into gold. So that was kind of one of them interesting things. Now, if you're wondering what the credit rating is for Canada, Fitch has Canada also as an AA plus. We didn't fall though. We'd already earned our AA plus. So no worries here. Everything is pretty much as is. So that's been the big driver for last week. Now, we do have drivers coming up for this week, and we'll get to that a little bit later, of course. Now, let's see what we got. All right. We have Mary in the house saying, hello, everyone. The freaking Oracle. You don't have to leave home to pitch a tent. Just, oh, dear, banana bread. I don't know where you're going there, Ken. I'm going to leave that alone. Andrew is in the house and he says hello. Hello, Andrew. All right, let's just get to that next story, because what ends up happening is once everybody starts talking, the news gets kind of pushed behind. So I love getting the news out of the way sooner than later. All right. So our next story is no windmills for you. That's actually really kind of interesting. So Alberta has put a 6-month hold, so a 6-month pause on all wind and solar projects that produce more than 1 megawatt. Now, that 1 megawatt pretty much gets rid of all of the larger projects. So if you're doing stuff like at home, like if you're setting up solar power or solar panels, or maybe, I don't know if people put little windmills in their backyard, but definitely solar panels, you're fine. That doesn't affect you. Now, the reason they say they're doing this is they're saying there's a lot of issue with the current development policies, and they want to close the gaps in those policies. So, oh dear, did I? That's right. Oh, sorry, Lisa. I don't know why. Even after we had that whole Mary Marie thing. Sorry, that is just really, really funny. I'm just having one of those days where I think my head's a little scatterbrained today, to be honest. But we're pulling it together, and your name is Lisa. Although, if you were to legally change your name to Mary, it would save me these embarrassments. Not to say you should do that, but that's just a thought. All right, back to the windmills. So this basically, this move, when we're looking at the move itself, it's not going to affect a lot of the things that are already in progress, but it's mostly the newer ones that are going to be coming up. And here's a really interesting thing. Currently, 17% of Alberta's power does come from wind and solar. Now, they do have a 30% target. So they're looking to have all of their power 30% from wind and solar by 2030. Now, they do say they're well on track, so that this isn't going to affect that target. They will still be able to hit that. Now, this is not going to go over well for the federal government. They're not going to like this at all. And as you know, the Trudeau Liberals have been butting heads with Alberta for a long time. So we'll have to take a look at that. Sammer's in the house. BOA trade equal good afternoon all. Or good afternoon, LOL. I need to change my handle. I know, Lisa. I don't know what it is. I can't believe I did that mistake again, Lisa. I am so sorry. Wow. that sucks. Oh dear. All right, next news story. Let's just get these. We're going to pound these out as quickly as possible here. The death of plastic. So you guys have we've all been through this whole single-use plastic. So no more bags, no more straws. And I'll tell you, I cannot get used to those cardboard straws that they give you now at fast food restaurants or wherever. I mean, they don't work as well. I just find them to be very annoying. What do you guys think of those straws? I mean, are they as annoying to you guys as they are to me? They're very annoying. I have gotten used to the plastic, but here's the thing. When you think about all of the single-use plastic bags, now pretty much they're giving you, like, I know when we order food, they just deliver it in the canvas bags. People are throwing away, those canvas material, whatever they're made of. People are throwing those away. So have we just taken the problem, moved it over to another problem? Have we just substituted one problem for another? Is there a solution? I don't know. I know when I used to go to the store a lot, I used to always bring my backpack and just fill that up. So that's definitely a good one. But yeah, and freaking Oracle says paper straws is a limp topic. Oh dear, Ken, you're in a mood today, aren't you? So here's what's going on with plastic, though. The federal government, so the Liberals are not done. They want to get rid of more plastic. So right now they're setting their sights on plastic packaging. So pretty much any type of plastic that touches the food. So if you're looking at meat, for example, that plastic wrap over the meat, some of the plastic involved in, strawberries and things like that. So they're looking to get rid of that. So now they're in the process right now where they're currently talking to the grocers, and I think they have openings for the public to speak and give their feedback until the end of this month before they start looking at any form of legislation. But this one's going to take them a while to do. I think there's a lot of moving parts to get this going. Now, there is a concern, though, that removing all of this plastic means that they're going to have to replace it with something more expensive. And if that happens, those food costs are going to get passed on to us as consumers. So I think we're at a point right now where food prices are high enough. So I'm glad that this is going to take a while for them to get this figured out. But that's kind of where they're heading. What do you guys think about this? I mean, I can understand that we want to get rid of plastic. We want to find a way to save the environment. I'm all for that. Absolutely. I would really like us to develop some biodegradable plastic, like plastic that you can just, throw it in a landfill and it will just degrade into, who knows, whatever chemicals you make or whatever non-chemical things you use to make it. So that's just one thought that I have right there. Yeah, exactly. We should just have banana bread. Well, there's plastic wrapping around banana bread as well. So we have to sort of look at that. We may end up buying less, and that would hurt every link in the chain. Yeah, absolutely. Except for one, if people are buying, well, it depends. It's a two-edged sword. I was going to say if people can't afford as much, maybe there'd be a little bit less obesity. But the problem is, a lot of the food that really causes obesity, a lot of the really high calorie stuff is that processed cheap stuff, like your Kraft dinners and things like that. So people may be, eating that more than anything else, and that's not going to be very healthy for everybody. So that's one of the things that we do need to keep in mind. All right, our next story, and this one sort of came out of the blue. So we got a Trudeau split going on. Here's the thing. Trudeau and Sophie have officially become separated. So this has caused, this has caused a lot of interesting social media memes for sure. I've heard a lot of people joking about it, like, oh, she could even Sophie couldn't handle Trudeau's policy, so she had to leave. Maybe that's true. We don't know. We don't know the exact reason for it. What we do know is that it's not a divorce. So I know some people, especially very, very right wing people, have been like, oh, it's a divorce. But no, it's not that far. But it does mean that she's not going to be living at Rideau. So she's going to move out. And she also won't be able to, because they're officially separated, attend any events as the prime minister's wife. So she kind of loses a little bit like that. But I think she still gets RCMP protection. So that's just kind of interesting. It's like, what's going on? And, I even heard one rumor that Trudeau and his wife split just to try to get some sympathy for him. If that were the case, I think he would probably split closer to an election call opposed to this soon. So I don't think there's anything behind that. But hey, whatever you guys are thinking, what are you guys thinking about this? I mean, I can't recall any time I've seen a prime minister split from their wife, at least while in office. Maybe it happens outside of office. Friggin' Oracle says big ripple effect. Yeah, absolutely. Absolutely, with the whole food chain thing. Let's see. I'll look into Enduro Clean Technologies. They have a solution to the plastic problem. I own some shares. Nice. Nice. Well, and that's the thing. It does seem to me that there are solutions out there, but the problem is these are the type of solutions that cost a bit more money. And that kind of is one of those things, because manufacturers will always go for the lowest possible cost. So if there are better solutions, once those solutions, then they have no choice. And you start mass producing some of these other solutions, maybe the price will start coming down on these solutions. But now something like, well, as Lisa was saying, the Enduro Clean Technologies, once this gets closer to realization, that may be a very good investment opportunity. So definitely something to look into. The freaking Oracle said his father did it. Oh, there we go. See, that doesn't surprise me. So yeah, because I guess anytime you have a prime minister who's in power for really, really, really long, there's probably a bigger chance of that. And Larry has bought more Enbridge, 9.5% dividend. I jump in it. Yeah, definitely. Now this is the time when, if you're thinking energy, one of the interesting things is we just came out, and we know that a lot of the cuts that were made by different members of OPEC, most of them are going to sustain into September. And September is that time when oil naturally does begin to go up as we start moving towards fall and people needing heat. And plus, a lot more people using gas as well. You've got, one giant part of the workforce is people who work in schools, universities, things like that. They're all going back to work pretty soon, and people going to school, and people who drive to school. I mean, yeah, there's going to be a bigger demand for energy right across the board. So getting into something like Enbridge right now is not a bad thing, because that dividend yield is going to get smaller as the price starts rebounding in the fall. So I know I did the video on TC Energy as well. Yeah, I think the energy supply is just going to be, it's going to be higher demand for it, and that's going to be good. All right. Let's talk a little bit about jobs. I got to change the sign. There we go. The technology. I'm hoping someday I can have like an AI that listens to me. And as soon as I say, it's time to go to jobs, it'll automatically drop that up for us. So that's kind of a a good thing. And Verena is in the house. Hello, Verena. You won a channel membership today, so congratulations. All right. Now, on the jobs front, we had job reports coming out in both Canada and the US. So Canada, we actually lost 6,400 jobs in July. So that's kind of a cool thing. Unemployment has risen as well to 5.5%, and the jobless rate is at 5.37%. So definitely interesting job numbers in Canada. It does show that, at least on the surface, it does look like the rate hikes are working and pulling these down, which definitely should mean that the Bank of Canada will pause, at least in the foreseeable future. We're hoping for this. One downside to this is with immigration being so high, it may be inflating some of the unemployment numbers, but I think for now, I think this will make the Bank of Canada happy. Now we still have a little ways to go before the next meeting, so there's going to be more data that comes out. But so far, the data is working in our favor for that pause to continue. With the U.S., their job openings, they fell from 9.62 million to 9.58 million. Layoffs fell as well from 1.55 million to 1.53 million. And the amount of people quitting actually fell by about 300,000, which is great. So the U.S. labor market is also looking like it's starting to slow down, which is what the U.S. Fed wants to see if they're going to stop rate hiking, which is good. So I think it's looking really good, because once we get to the point where the rate hikes are just done, then we can get to the point where we can start making some more money on the market. And that makes it a little bit easier for the market to sort of become more bullish. I'm not calling us in a bull market right now. That, yes, I mean, statistically, mathematically, the NASDAQ is in a bull market, and we're just kind of creeping into a bull market with the S&P 500. I don't think the TSX is mathematically in that bull market yet, but we're moving in that direction. But I wouldn't call it a full-on bull market. I would call it technical, but not really an actual bull market yet. But we'll have to see what happens. Okay, now let's jump to this next story here. So next we have is Meta, no news. So Meta has pulled the trigger on their no news. And most of you now, when you go into things like Facebook, you'll notice that all the news stories are just gone. And you'll see one little thing from Facebook telling you that, hey, because of that legislation, we're no longer showing you any news. So it has happened. Facebook, Meta. I don't think it's everybody yet, but I think most people are already at the point where they have that no news. So that's really interesting, because I know, and I noticed this with all the flooding in Nova Scotia. Normally, that's the type of thing that you get all these news feeds being shared like crazy on your feed, and I got none of it. So definitely, I've been seeing it. Now, Alphabet still is coming. They haven't yet, and you'll be able to tell if you want to know whether Alphabet has pulled the plug. All you have to do is go to Google and just do a search on like CBC News. And if it comes up, then you know you still have access to it. But they are next. We don't actually have a time frame on them, though. So that's going to be really interesting to see how that goes. Right. And let's see. Verena says, thank you so much for the free membership. Absolutely. No problem. And she just saw it, which is fantastic. All right. Our next story is, and this is the last time we will be talking about this. It's that BC port strike. So the BC port strike is officially done. That's kind of good. Now, here is the deal. So right now, they have a new contract and they have ratified it. So 75% were in favor. Now we still have, it's probably still going to take from now probably a month to a month and a half, if not more, to get rid of the backlog in that port. But luckily that has been fixed. Also, the issue with the East Coast one, the Halifax one, CN had lost part of their rail track, which was the only track going into the Halifax port. That's now been fixed. So our our rail is looking good. Our ports are looking good. So that's great when it comes to that supply chain. All right, King of Day asked, sorry, what caused the no news? Okay, well, there was a bill. It started as C-18. Basically, what this bill does, it's now a law, is it's saying that if you share Canadian news, like if you're a big tech company and somebody puts a link, so let's say I go to Facebook and I put a link for a news article, like a Canadian news article, well, they wanted Facebook to pay that the news company for having that link on their site. And Facebook is like, well, no, because, and this is the reason, is that when the person goes to that link, so the news link I put on Facebook, if somebody goes to it, they're going to pick up AdSense and whatever they're using to monetize their site, because the person doesn't stay on Facebook, they go to the website. So that's what makes it kind of a strange bill, in that they kind of want Google, like they also want Google. So for example, if you look up a news article on Google and then you go to it, they want Google to pay the whoever produced that article, they want Google to pay them a little bit. So it's kind of it's a really, really weird bill. And I know that for some reason, Trudeau is like, oh, we're going to make them tons of money, but they're not. Because here's the thing, all these stories are no longer going to get shared. And that's most of the traffic. So you take a CBC News website, most of their traffic comes from people clicking on links on some of these social media giants. That's how people get there. All of a sudden, those people aren't going to be coming. They're not going to get that traffic. So whatever ads they have on their website are not going to get clicked on, because there's not going to be the people there. So what Trudeau and the Liberals have done in this case is they have basically just shot Canadian news in the foot. Under the guise of trying to make them money, they're costing them money. And this is just and it doesn't matter to me. It doesn't matter what political affiliation you have. This is just a bad bill all around. And, it's not going to work. And here's the thing. And Trudeau's like, oh yeah, well, we're just going to stand tight on this. We're not backing down. Google will back down. Facebook will back down, but they're not going to, because here's the thing. They're kind of making Canada into an example for the rest of the world, so that the rest of the world doesn't start doing crazy stuff like this. I know there's a couple of states that want to do it, and I know Australia tried to do it at one point. So Canada is now kind of like the poster child for here's what happens to you. So unfortunately, at least as long as this government's going to be in, that's not going to get repealed. Now, I know the Conservatives said they will repeal it, and hopefully they do. But it's just another piece of bad legislation that did get through, and I don't know why people just didn't think about this one, and why it got pushed through. It just really, really shouldn't. And, well, it's a bad bill. And that's all I'm going to say. I'm not going to say that it's the Liberals' fault. It's just whoever wrote the bill wrote it poorly, and it should never have seen the light of day, in my opinion. Okay, and let's see here. Lisa said it's Trudeau being the tyrant that he is. Well, that's one way to look at it. That's definitely one way to look at it. And I think a lot of people in this community definitely share it. I mean, I find in the finance community, people's ideologies do tend to drift towards the right. Maybe not on everything, but at least fiscally for sure. Because we're all here to make money, and sometimes governments just make some pretty bad moves. But in all fairness, any government can do it, whether they're right, left, middle of the road, or whatever they are. Yeah, that's kind of one of those funny little things. All right. Oh, wow. I love it. We're getting through this stuff really, really, really quickly here. Just give me a second here. All right. Let me get to our last news story, and then it's just all chat. So whatever you guys want to talk about, just give me a second here. There we go. For some reason, it always drops one on me. All right. This one here, your first home buyers, so the first home savings account, we got some information on their uptake on that. So here's the interesting thing. So far right now, only two major banks, so two of the big six, are offering this one. and that is RBC and National Bank. Those are both offering them. Now, you can also get these from Wealthsimple, Quest Trade, and Fidelity Investments Canada. I'm not sure right now about EQ Bank. I think EQ Bank is either you can or it's about to happen with EQ Bank as well. Now, TD and Scotiabank, they are expected to offer the account by the end of August. I know CIBC says they're going to have it ready in November. So by the end of this year, you should all have access to it. Now, here's the deal. So RBC says that they have, nobody's given exact numbers, but they said they've had tens of thousands of people open up a FHSA. And so far, most of their people are younger than 45. National Bank said they've also had a lot of interest in it, and that most of the people on National Bank who are opening these are under 30. So we got that happening. Your FHSA. Have any of you guys opened up your FHSA yet? If you're eligible, of course. So let me know in the comments if you guys have done that. So that's kind of an interesting thing. Now, here's the thing: if you're eligible, and you're at a point where your TFSA is full and your RRSP is pretty full, you really should probably just fill the thing up, because even if you don't use it as a down payment on a house, after, once you've got it maxed out to 40,000 and you hit, I think it's 15 years, you then have to do something with it. So you have to take it and it gets dumped into your RRSP. So it basically creates a bonus $40,000 worth of space in your RRSP if you don't use it. So it's definitely worth using, absolutely, for sure. So keep that in mind. Let's see here. King of Day said thanks. And Lisa said, can you tell I don't like Trudeau? I was thinking that. I was thinking I see that. And Kay Miller is opened. So you have opened your FHSA and maxed it out. So that would be, well, $8,000 right now, because you can only do $8,000 a year until you get to that 40,000. But it does carry over just like your TFSA. So that's a nice thing. But keep in mind, if you can still grow it just like you can anything else, just like you can your TFSA, for example. So that's not a bad thing. Sammer says, my wife and I both have the First Home Savings Account. Awesome. Awesome, awesome, awesome. Does the FHSA avoid 15% U.S. dividend tax? No. It works. It works more like a TFSA. So you're still going to pay withholding tax on that one. So that kind of sucks. I would like to see that tax deal changed a little bit. Like, I don't think we should be paying withholding tax like on the TFSA, but who knows if they'll ever renegotiate that? Probably not, because everything is in place. But yeah, you would be paying 15% withholding tax on that, and you're not going to have a way to get that back either. So it's the same idea as, as the TFSA that way. But, here's the thing. It is interesting. I really should do a video on the FHSA. Just one of the things I guess I have is that it's like everybody and their dog has already hit it. So Andrew says, do I get one? Well, I don't know if you get one or not. You're going to have to check with your bank if your bank is offering it, or Wealthsimple. As long as you haven't, as long as you don't own a home, don't currently own a home or have purchased one in so many years, then yeah, you would definitely be able to qualify for it. There used to be a whole bunch of different rules, but they've got rid of most of them, thankfully, which is good. So not a bad thing. Let's see, best trading free site, Wealthsimple or National? It depends on what you're looking for. Wealthsimple is pretty easy to use. Wealthsimple has when you sign up using a referral link with Wealthsimple, for example, they do give you up to $3,000 free. Most people get about $5, to be honest. I'm not going to sugarcoat that at all. National Bank doesn't really have any kind of a referral program like that. But What I do like about National Bank is their brokerage. I find it's a little bit easier to sort of see everything you have. It's kind of like if you use Wealthsimple on your computer, opposed to on a mobile device. It works, their online version shows you things a lot easier. So it's kind of like that. When it comes to like if you're doing a lot of trading, like if you're doing swing trading or day trading, National Bank works a lot better than Wealthsimple. But they are both good sites. And one of the things I do really like about Wealthsimple is they're constantly upgrading their site. So a lot of times, if there's a feature they don't have, it comes along faster. Now, one thing that National Bank has that Wealthsimple doesn't is Wealthsimple will charge you $10 a month if you want to have US accounts. Now, you can buy US stocks and keep it in your regular account, but you're still you're doing currency conversions whenever you do that. Wealth with National Bank, you can hold actual, you'll have a USD TFSA, you'll have your Canadian one, so you can ask them for a USD and they don't charge you any extra for that, and there's no fees for that, and that's all commission free as well. So that's kind of a nice thing. You can have the exact same thing though on Wealthsimple, but you do pay $10 a month unless if your investments, if you have more than $100,000 on Wealthsimple, they do waive that fee and you get that part for free. So those are kind of the things. I think they both are really good brokers, in my opinion. And it really boils down to, I think if you want to do it, if you're you're looking, on the go and you want to do it on your mobile, I would say the Wealthsimple mobile is probably better than National Bank's. So I would go Wealthsimple for that reason. But I do use both. My main investments are in Wealthsimple. And I have a new TFSA over on National. That's what I'm using for for that series that I'm building it. So $400 a month into it, and we're just going to build it together as we go. Also, I have an account there that I do swing trading on as well. So that's what I have over in National Bank. But I do like the Wealthsimple. Anyway, I don't want to ramble on that. Okay, I'm going to quickly go over what we got coming up next week. So next week in Canada, we got nothing happening. Now, keep in mind, it's a holiday weekend, so there's only a 4-day week in Canada. So the next big thing actually happening in Canada will be our CPI that comes out on the 15th of August. But this week's going to be a pretty slow week in Canada. Not to say that it means all green sailing, because in the U.S., on Thursday, we have the CPI coming out in the US, and we also have PPI following the next day. So CPI can definitely, if it shows inflation isn't moving in the right direction, that could have a big impact on the market. We could see red if that happens. But the way things have been moving, the trends we've been seeing is that it has been going down. So I'm kind of optimistic for the CPI. So I don't think that's going to be a big issue. Now, we do have earnings reports coming out this week. You remember how last week we had a ton? This week we've got a ton again. We've got Constellation Software. We got Manulife Financial, Sun Life Financial, Barrick Gold, Great West Life, Power Corporation of Canada, WSP, Hydro One, Emera, Canadian Tire. So there's going to be a lot of earnings reports coming out this week. So definitely things to sort of watch for especially if you're trying to swing. And I know that we got a few people in here who do some swing trading on some of these earnings reports. So if you're one of those people, pay attention and keep in mind too. I know some people will be like, okay, well, I'm going to take a look at their earnings, or I'm going to take a look at how they did in the last 3 months. Keep in mind that when it comes to earnings, it's Q2. So a lot of times that means that it cuts off in July. So, the 3 months, so your first Q is January, February, March, and this one will be April, May, June. So those are the months you want to look at when you're sort of trying to get a feel for what's happening with a company. Now, let's see. What about Interactive Brokers? I've never used them. I do not know about them, Nick, but yeah, I can't give any opinion on them at all. What about Questrade? So Questrade, I haven't used Questrade, but here's one of the things. There's some positives. Questrade is pretty good because you do get American accounts with them. One of the downsides with Questrade is that if you're a brand new investor and you don't have $1,000 to invest, you have that minimum. You need $1,000 to sign up for Questrade. Whereas like with Wealthsimple, if you got $20, you can sign up with Wealthsimple and invest that $20. So Wealthsimple is a little bit easier to use that way. But there are some people who love Questrade. Canadian in a t-shirt. He's a huge Questrade advocate. So he definitely loves Questrade. And sometimes when people ask me about the nitty-gritty on Questrade, I'll say, go check out Canadian in a t-shirt. He's got a lot of good stuff on Questrade. I don't use Questrade, so I don't have a lot on it, but I know a little bit about it because mostly from watching his videos, to be very honest. Manulife or Sun Life? I'm going to go Manulife, and I'll tell you why. Manulife, they did recently expand into China, and I think that's really made them strong. So I think if I had to choose between the two of them, I think MFC is just a slightly stronger company. And earnings-wise, I do think they're going to do a little bit better than Sun Life this time around. Oh my God, Lisa, you have to work tomorrow? Oh dear. That's never good. I can't say too much about it. I know what I used to, long years ago, I used to work for a corporate staples. I used to have a management role in corporate staples for US. And so we always had to work any holidays, any stat holidays here. We would have to work, provided there wasn't a stat in the US. So that was always kind of a fun little thing. Oh, Nick, you've asked, this is your second time asking me this today. You asked it in a comment as well. So Lumine, they don't have a very big history. Now they've been moving in the right direction since they came out, and I definitely would like to watch them. And the same kind of general idea with Topicus. I know Topicus, they had a huge rise, and then they of course fell when most of the market fell. But they have been making a lot of that ground back up. So both of these are stocks I do like the way they're moving right now. Lumine, I'd like to see a little more history. But Topicus, I would definitely say it's worth watching. It's worth being on a watch list at the very least. So yeah, I don't think they're definitely nothing I can say negative about either of these, Nick. I do like them. I don't invest in them, but they're definitely worth watching. I think Topicus probably a tiny bit more, but Lumine, my gosh, since they've come out, they have moved quite a bit. Now, my understanding with Lumine is that they do have a relationship with Constellation Software, and that's a company. Constellation Software is, I think they're almost like they feel like they're too big to stop. I love that company. I would just love to see Constellation get themselves. Actually, I'd like to see a stock split with them because their stock is like thousands of dollars, and I'd love to see it come down to a more affordable chunk. And one of the other big things, when we're talking about National Bank versus Wealthsimple, Wealthsimple does let you have fractional investing, and that is really good when you want to. Let's say you want to get into something like Constellation Software, and you don't have thousands of dollars to buy one stock. You can buy like $100 worth of it, so you get a fractional share. National Bank does not have that, so you either pay for one share or you just don't get it. Now you can, with some of the bigger US ones, you can like buy into like CDRs or things like that, but you pretty much have to pay for a full stock with National Bank. So that's the one disadvantage that National Bank has over Wealthsimple. And if you're a new investor and you want exposure to companies that are expensive, like you want to buy a little piece of Microsoft, or you want to buy a little piece of Apple, that could be a big difference. So for that reason alone, Wealthsimple may be your better choice. Now, and anybody who is new and they're thinking, okay, well, how do I get my hands on that Wealthsimple? There's links down below. I got links for Wealthsimple. I also got a link for Blossom. If you guys are not, any of you guys who are not on Blossom, it's like, what the banana bread are you doing? Get over there. Just go down there, grab that link. It's absolutely free. And even if you Some people are like, well, I don't want to, I don't want to link it to my brokerage. Well, that's fine. If you don't want to do that, you don't have to, but you can still come in. You can follow me. You can follow all of the, like most of the who's who in Canadian financial YouTubers are all over there. And it's a great place to just connect, talk, ask your questions, and get all kinds of answers. So I definitely love it over there. So any of you guys who are not over there yet, get over there, follow me, and I will follow you back. Absolutely. And then we can have some conversations along the way. I'm just going to quickly get out of the there we go. Just put the news, reset the news back to the beginning as we get here. All right. It's coming up on the channel tomorrow, or not tomorrow. Well, I'm filming it tomorrow, but Tuesday we have somebody requested that I revisit the Dream Team. So back in March of 2022, I did this little video where I made a Dream Team ETF, I believe. Now, this is totally me going off of memory. I believe it was a request from Patricia. I think it was. Can't be 100% sure, but I do believe that's who it was. So I think Patricia had requested that I do an ETF video, and I did this Dream Team. So what we're going to do in this video is we're going to look at, I think there were 10 of them, and we're going to look at the 10 of them. We're not going to look at them hard. I'm just going to quickly pull them up. We're going to say pass or fail, and basically then we're going to create a brand new one. It won't be 10 though. We're going to do 5 because, I try to respect your guys' time by not having, I don't want to have a 20-minute video if I can help it. So that's what we're going to be doing in that video. And then of course, when we get to Friday, we get another deep dive coming. And right now it's funny. Hammond was winning and just out of the blue, all of a sudden Algonquin has moved into the lead. So if you want to have any say on what that next deep dive is, be sure to head over to the community tab, get in there and pick which company you want. Whether it be Algonquin, whether it be Hammond. Hammond's been doing fantastic, by the way. So I was actually kind of excited. I want to do Hammond myself, but you guys choose. So whatever you guys decide is what we go with. So that's just the way it goes. Oh, and what is this? Can you link manually? That's what I do since you can't with national bank accounts. Can I link manually? Oh, are you, like the Wealth Simple? Just give me a second here. I think I can do that. I just have to nab it. Boop, 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 boop. Here we go. Where is there it is. Yeah, I can do that. Here we go. So this here is the link to my Wealth Simple affiliate link. That's for anybody who does want that. Just click on that. You go over, sign up. Now, of course, you may have actually been asking for Blossom. See, I don't know what you're talking about. I'll drop the Blossom one here as well. You know what? Let's just drop links. Welcome to the Mountain Finance Link Farm. Here we go. There we go. All right. So those are the links right there. I really should drop more links anytime I mention something. Just like, hey, here's a link. That's just me. That's just me. I'm not the most aggressive person at selling my links. So that's kind of cool. So as we're starting to head deeper into this, guys, throw in your questions. Ask me anything, whatever you want. It doesn't matter. We'll be back, of course, here next week as well. We're going to do another one of these. And then the following week, that's when we got whatever it is for the channel members. So I'm looking forward to that, to seeing what you guys want, which will be fantastic. Vineet is in the house. Hello, Vineet. Good to see you. You're coming in late, but better late than never. That's what I always say. So that's kind of a good little thing. Yeah, I think that's all that's really going on the channel right now. A little bit slow in the summer, but we're going to keep it going. Chinese stock, Alibaba. Yeah. I haven't really been too keen on some of the Chinese stocks, and that's only because there's been so much instability there. So I'm not saying they're a bad bet. I think something like I can't even pronounce it great. Alibaba. I think something like that. They're probably. I know they have crashed big time. They're probably going to rebound once the Chinese market starts doing a lot better. So that's what I should say. That's what I can say about that. I would be more I'm more or less aligned like when I want to go international. So if I want to, if I want to invest in Chinese stocks or if I want to invest in India stocks, I usually will look for an ETF. Only because you know what? I understand the Canadian market. I understand the American market. But, I know for a fact I'm never going to fully understand the Chinese market at the same level as I'm going to understand the North American markets. So for that very reason, why not have an ETF where there's somebody who is an expert managing that account on the Chinese markets or on the India markets? Because I'm kind of bullish on India. Their economy is just doing so well. I think some ETFs in India are not a bad idea. I don't have any yet, but it is on my radar. Sorry, I should say add trades manually, not link manually. Oh, okay. That's fine. Need your thoughts on this one. Let's say you have $80 to move from one account to another. Would you recommend dumping it in all at once or DCA over time? Thanks. Okay. I guess this is where I have to ask some clarification here. So if I have $80, so are we talking about I have $80 in an account and I want to move it? So if it's from one account to another account, I probably would just move the whole thing. But if we're talking about buying, well, here's the thing. There's nothing wrong with DCAing. DCAing is one of the safest ways to invest. But I'm not, and this is the thing, I think I don't really understand what you're asking. $80,000. All right, that's a big difference. That's a big difference. All right. So if you have $80,000 and you've got it sitting in an account, well, when it comes to how are you going to invest that? So first of all, where are you going to invest it? There's a lot of questions. You're going to want to know, first of all, where you're going to invest it from. Do you have room in your TFSA? Are you looking to put some of it into your RRSP or even your first home buyers? I mean, once you know where to put it, that's fine. So let's just say you had 80,000 room in your TFSA and you want to move it in. Well, move it. You can move it all at once. There's no reason why you couldn't. Otherwise, it's sitting in your personal. But here's the thing. Depending on how you're planning to buy, like if you're sitting, let's say you're sitting there and you're saying, okay, well, I'm going to do a DCA strategy. I've got $80,000 to work with, and I'm going to be DCAing into these 5 stocks. Well, you don't have to move the whole 80,000 in. You could move in as much as you need. If let's say you're spending $10,000 a week. Well, you only have to have the 10,000 in the account to do that. So it really doesn't matter. But here's the thing. If you're not 100% sure that you want to use that whole 80,000 for investing, well, in that case, maybe moving it in increments is not a bad thing because you may want to have access, especially if where it's sitting, you can move it out quickly. Now, with like Wealth Simple, for example, whether it's in a personal account or a TFSA, you can still get it out pretty relatively at the same speed. It's usually about 3 days to move things out. If you want to move it from there to a bank account. But yeah, it really boils down to how you plan to spend it, how you're planning to invest it, the way you're looking to do it. Now, what I would caution in a situation like this is that I wouldn't, I think DCAing is definitely a really good way to go. Because right now, if you get in now and you were to put it all into something and then you don't know what's going to happen with it. You don't know if it's going to crash. You don't know if it's going to fly at this moment. So by DCAing, you're getting a nice, good average. You're paying basically the average price opposed to paying opposed to overpaying or underpaying over time. So that's definitely not a bad strategy. All right. Yes, with Blossom, I was making a statement, not a question. Oh, okay. That's kind of cool. Emerging market ETF. Yeah, there's definitely some emerging market ETFs. Some of the all equity ETFs. So, for example, VEQT or XEQT, they're great for that reason that they do hit a lot of the big markets. So, international markets, but they also have a good presence within emerging markets. So that's kind of not a bad thing. And then, all right. And yeah, so kind of funny there. Yeah, it's kind of interesting. I guess the whole idea of a lot of times, like if you're a person, this does happen. Sometimes people come into an unexpected amount of money, and a lot of times people don't have any clue. What should I do with it? How should I invest it? Sometimes people will come in, they'll just dump it into something, and then they won't even think about how they're spending it. They're like, "Oh, okay, yeah. Oh, I'll just take a bunch of Microsoft. I'll take a bunch of TELUS." You want to still be strategic. You still want to, because here's the thing: when you're new to investing and you're starting off with like $400 a month, or $100 a week, or whatever it is, you have time to sort of figure out diversification. You have time to sort of make little mistakes along your way as you're learning and getting your investing muscles stronger. A lot of times newer people who get a big chunk of money, they just don't know what they should be doing, and they make some big mistakes. Sometimes if you buy a stock that's not that great, and you decide, oh, well, I'm just going to dump 20,000 into that, and I'll dump 20,000 into this. Well, all of a sudden your pain can be really, really big. So you still, in a case like that, if you're a new investor, you want to, you still want to take your time. Don't just take your 80,000 and just go poof right in. What you want to do is you want to, DCA or something like that. Take the time to learn a few things as you're going in. And in a case like this, if you're absolutely brand new and you've got this giant chunk of money, in a case like that, it doesn't even hurt to even use like a financial advisor or look at a robo investor to get yourself going. I know I was watching, Robin Haney had a video the other day I was watching, and he was mentioning that when he started investing, he started with robo investors because he didn't know a lot about the market. So he started with a robo investor and learned by watching what the robo investor was doing. It started to give him stuff to research, things to look at, like what's going on here, what's happening here. So that's kind of an interesting little way to approach it as well. And as well, there's a lot of different channels out here. Like this is one of the things I love about this new series of mine, is that you're going to be able to watch and sort of see as I build. And I'm going to, the first video is more or less getting things in sight. But with the second one, the third one, we're going to have a little bit more analysis. I'm looking to make some fancy little graphs and all of that fun stuff. So that way there we can sort of look at just different ways. Like right now, when I did the first 400, there was no way to get a good diversification unless I decided to go all into like some ETFs that, provided the diversification for me. But with this series, I'm kind of shying a little bit away from ETFs. I'm not saying I'm not going to use them. I'm definitely going to use them. But I want to just sort of build things up and sort of show how diversification starts to come into focus as you're adding to your account and as you're starting to develop it. So I'm trying to make it more realistic. Like I think a lot of new investors don't fully understand ETFs initially when they begin investing. They understand companies. It's like, oh, I should buy Coke, or I should buy Rogers, or I should buy the Bank of Nova Scotia, things like that. So we're going to go that way and try to sort of build things up a little bit. But you'll definitely see some ETFs popping up into that. Let's see, currently with Wood Gundy for over 20 years and recently 3 years, not satisfied. Who should I transfer with? Top 3 firms. Wood Gundy. Now you're outside of my realm, Yvonne. Here's the thing. I'm going to assume that Wood Gundy is, are they a financial group? I'm going to think. There are definitely there's definitely a lot of good firms out there, but I'm not really familiar with them because where I'm kind of in the whole do-it-yourself investing realm, I haven't looked at a lot of firms, although I probably should, because I think that would be really interesting. But I don't have an answer for that, Vaughn. I don't want to, I don't even want to try to conjecture one. Do you ever do videos where you rate people's portfolios? That's a really good question. I haven't yet. I have not. But okay. Just a second. I'll be with you in a second, Vaughn. Now I know what Wood Gundy is. I did not know the name of their brokerage. So would I ever do videos where I rate people's portfolios? Yes, I would. I would love to do one of those. I haven't done it yet, but I know, and Robin Haney does this. He does it work with Blossom, where he will use your Blossom profile to rate your portfolio. I wouldn't mind doing that. I would not mind doing that. So here's the thing. Let's think about that one. I do want to do it, and if there's enough interest in the community, I will be more than happy to do it. Because here's one of the things: as long as whoever you are, if you don't mind me being brutally honest, because I'll be brutally honest, I'm not going to say it's all great if when all of your shares are in like Weed MD, and I'm like, yeah, it's fantastic. No, it's not. So we'll take a look there. So yeah, owned by CBC. So CIBC. So yeah, if you're leaving them, you got a couple of, like I said, this all goes back to Wealthsimple versus now here, I guess, Vaughn, let me ask this question. Do you plan to do the investing yourself? Or are you looking for a managed account? Because Wealthsimple has Wealthsimple Invest, and they have robo-advisors there that will do all of the work for you. And they do work good. I've had a lot of people who've told me some really positive things about them. I did I think last year, I threw a little bit of money into Wealthsimple Invest just to see how it went. And it did good. It did a good job. I had a half decent return on it. So Wealthsimple Invest, I think, is one option. But if you like the safety of having one of the big six, National Bank, I think, is definitely a good one. And if you're doing it, if you're doing your own investing, so do it yourself. The National Bank is good because you're not paying commissions on trades. Now, I know something like iTrade at Scotiabank, they will charge you commissions, but they don't charge commissions on ETFs. So I think that's one of those little things. And I'm actually really surprised. After National Bank said they're no longer charging commission fees, I really thought the other banks would follow in suit as a way to compete with Wealthsimple, but they didn't. So that's kind of weird. Let's see. Hydrogen stocks. Yes, no, or maybe so. I'm in the maybe so area. Now, I did do a video, oh gosh, probably about 8 months ago on hydrogen, because there was that deal that Canada made to open up another, basically a green hydrogen farm in Newfoundland. And most of that's going to be shipped over to Germany because they have a high demand for hydrogen. So, and plus now, CP Rail is actually doing some testing with a hydrogen rail car, so an engine run by hydrogen. So I think hydrogen has potential. I don't think we're at the point yet for it to be explosive, but I think if you want to put a little bit into hydrogen and sort of like let it go, that's probably not a bad idea. Let's see. Most banks offer little interest. Is it logical to move the amount to a broker purpose high interest savings? Have some interest while waiting, and the amount is available at a click. Well, yeah, I did mention about the cash accounts. So there are cash ETFs, one of them, for example, being cash, and they're paying about 5%. Now, that keeps going up as the rates go up. So I don't know. They might be up. Actually, cash was at 5.25, and it may even be higher now. But I know as well with some banks, so over at EQ Bank, for example, you can lock yourself into a GIC a 1 year and get 5.5%. So that's guaranteed interest. You're going to get that money no matter what. So there are definitely better options than sort of sitting it into one of these really low interest accounts that normal banks will have. But yeah, if you do have a brokerage and you're thinking, well, I want to have access to that money, I need it to be liquid, then yeah, going into something like cash is a good one. But keep in mind that liquid, like let's say Wealthsimple, let's say you moved it over to Wealthsimple, you put it all into different cash ETFs. Well, even if you liquidate those, you then have time. It takes a little bit of time to get things out. So you're not going to have it available at a click. That's the downside. With a GIC, you're locking it in for a year. So it's not available at a click. That's the downside. Something like just the regular EQ savings that gives you about, I think it's at 2.5% now when it comes to its monthly and yearly interest. So that's not too bad. And that would be something that's available pretty fast. But it really boils down to exactly how liquid you need it. And that's the one downside to using, for example, stocks. Now, some people might say, well, you can just drop it into crypto, but that's super risky. So I wouldn't do that, just to put that out there, even though you can normally liquidate crypto really fast. And you could also make a ton of money really fast, but you could lose just as fast. So just sort of keep that in mind. Sammer says, will be awesome. My managed account is doing about 6.5%. Oh, that's not too bad. That's not too bad at all. Thanks. Absolutely. We're going to see a race for green hydrogen soon. Some thought. Yeah, absolutely. Green hydrogen is huge. Like right now, when you're looking at gray hydrogen or even blue hydrogen, we're still putting a lot of carbon in with those. So green hydrogen is going to be huge. But it really boils down to what is going to happen. I know everybody's thinking, okay, electric cars are going to win the race. Well, before you completely give them the trophy, though, you got to ask, do we have a power grid that can support everybody going to electric cars? We can't. So I think you're going to see, I think you may even see a resurgence in hybrid cars down the road, and that would be good for hydrogen. Green hydrogen, yeah, absolutely. There's a big demand for it in Europe. So I think that's not too bad. So I use a bank account for super liquid cash. Yeah, you kind of have to use something you can move something through really fast if you need to have it that liquid. So that's kind of a thing. Lisa says, my banker at National Bank told me he would do at least 5.5% on a GIC. I was happy to hear that, as I have some maturing in a week or so. And that's not too bad. That's not too bad at all. Yeah, I mean, if we hit the pause and we don't go any more rate hikes, then right now we're probably peaked at where you're going to be able to get a GIC from percentage-wise. So 5.5% is fantastic, because you look at it this way. Sometimes people will say to you, and this is kind of the argument against debt. One thing people will say is, okay, instead of paying extra money on your debt, just invest it instead. Because you can get, you can probably easily get 7-8%. Problem is, though, is when you look at, let's say you have a really good debt rate. Let's say, for example, your mortgage, you're paying, we'll say you're paying 5% on it. Well, everything extra you put on your mortgage, that's 5% guaranteed. That's totally guaranteed, 100%. You're not going to, otherwise you're paying that if you're not doing it. So with the market, yeah, you can get 7-8%, but it's not guaranteed. So it's one of those things you have to weigh when you're looking at, should I pay off some debt or should I invest it and try to make a tiny bit of extra money on it? When we're in a full-on bull market, well, it's a little bit different. When we're in a full-on bull market, it's much easier to pull better returns. But you take anybody who at the end of the last bull market thought, okay, let's take on some extra debt and we'll invest it and we'll just make all that money. That was a bad time to do that, because all of a sudden you weren't making all that extra money and you ended up paying debt and you ended up losing money in the long term by doing that. So it's one of those things to always keep in mind. When you do put extra money on debt, that debt's gone. So it's guaranteed. It's not guaranteed with the market. Although, the fact that you're here means that you're interested in learning more about the market and trying to increase odds in your favor, which is a good thing. Absolutely. All right. Let's see here. And Les says, I prefer to pay down debt before investing to lower personal financial risk and increase flexibility. There we go. Couldn't have said it better myself, Les. That's exactly the point that I was making there. So, okay, we're coming towards the end, folks. If you got any final questions, throw them out there and we'll address them. And while you guys do that, I'm going to have a sip of bubbly. Oh, that's always good. The nice thing I really like is I like the fact that we're heading into fall. Not just because I know some people are thinking, yeah, it's because you have a lot of money invested in oil. You want to see that going up. I absolutely do. Um, I am a little over invested in oil. So I am looking to actually move a little bit out of a couple of positions. Um, but I'm still waiting at this point to see what happens in towards the fall because I've got a couple. My XEG, and I always love XEG, but they have been in the red a little bit for me. I got in at a higher price than I probably should have. So I'm looking for that one to go back in the green. I might move out of that one because I'm trying to get my overall oil down a little bit. So that's one of the one of those things. Ooh, last question, I promise. Okay. All right. Throw it away. Let me see what your question is, and we'll deal with it. So yeah, that's just one of those things. It just falls to me. It's just one of those years. I'm not like a summer person per se. Um, just too hot, and the market's kind of slow, and I like to see things moving a little bit. See, the economy pumping a little bit better. So, October. I'm hoping this year we have that traditional Uptober, which some people like to say, because I'd like to see some money going. I'd like to see it. It'd be great to see a couple of sustained green months. Oh, this is an awesome question. I love this question. So, BAM or BN. So, here's the thing. So we're looking at Brookfield Asset Management. So it's the new Brookfield Asset Management versus Brookfield Corporation. I like them both for different reasons. Now, when the old Brookfield Asset Management decided to split into two companies, so into BAM and BN, they moved a lot of their premium assets over to BAM. And BAM is supposed to be their income generation side, while Brookfield Corporation is going to be more of their growth side. So that's why I love them both for two different reasons. Now, the very first stock I bought for this new TFSA was actually BAM. So Brookfield Asset Management. They were the first. Now they're currently a quarterly dividend, and I do think they have potential for bigger growth. I know right now they're still they're kind of both still similar, but I do think long term, I think we're going to see a bigger total return in Brookfield Asset Management. So I did choose that over Brookfield Corporation. Not to say that down the road I don't add some Brookfield Corporation, because I do like that growth as well. So, but if I only could have one, it would be BAM. So, that's where I would go on that. All right. Well, guys, I think this is the end of the line. There's no more questions. I got caught up. Next week, we'll be back here again. We'll do this all over again. And be sure, if you're a channel member, to hit that community tab. Give me some ideas for what you want to see on the exclusive video, because I'm looking forward to getting that out for you. And those of you who have not yet voted on what you want the next deep dive to, get in there and give me a vote. So that way there, I can have that ready for you guys on Friday. And be sure as well, any companies you do want to see me do that I haven't done, or if I haven't done them in a long time, just comment on any of my videos and let me know, and I will add them to the pool. That way there, they'll get done. Well, they may not get done, but they'll at least get into the vote. And then we'll see what happens from there. And anyway, in the meantime, everybody, take care. We'll see you next week. Have a fantastic holiday Monday, everybody.